Once valued at $32 billion, the second largest cryptocurrency exchange, FTX, is now next to zero. You've probably seen or heard about FTX CEO Sam Bankman-Fried, a shaggy-haired 30-year-old in shorts and United trainer who plays the video game League of Legends during business calls. He was once regarded as an eccentric genius, but with the demise of FTX, his odd habits no longer seem so amusing. Many people have been wondering how the crypto exchange giant fell, and there have been numerous theories. If you want to know why FTX collapsed, you can watch the video we made about it. However, the focus of this video is how this crypto exchange got started and their rise to becoming one of the largest crypto exchanges in the world. Hello, and welcome back to Crypto Channel. The rise of FTX would be incomplete without mentioning FTX CEO Sam Bankman-Fried, also known as SBF. So to begin, we'll start with a brief background story about Sam Bankman-Fried. SBF was born on March 6, 1992 in Palo Alto, California, where both of his parents were law professors at Stanford University. He graduated in 2010 from Crystal Springs Upland, a private high school in California, and went on to study physics at the Massachusetts Institute of Technology, or MIT, the same year. After graduating from MIT in 2014, Bankman-Fried began working as a trader at Jane Street, a global liquidity provider and trading firm. He worked there until 2017 and also worked briefly at the Center for Effective Altruism that same year. Bankman-Fried decided to apply the training techniques he had learned at Jane Street to cryptocurrencies, and that is how he founded the cryptocurrency trading firm Alameda Research. Alameda Research quickly made a fortune by capitalizing on price differences in global markets. In 2018, he'd realized that the existing crypto exchanges were simply not good enough. They were glitchy, unsafe, and provided little to no customer support. Bankman-Fried and his co-founder Gary Wang, an MIT graduate and ex-Google software engineer, believed that they had the technical know-how to create an exchange. But the main question was whether they could attract customers. SBF stated at the time that he was only 20% optimistic. However, as they began, customers began to arrive. People began discussing the new exchange on social media and telling their friends about it. By the end of the year, the trickle had turned into a flood. FTX had 5 million users, with daily volume peaking at a record $60 billion in May that same year. FTX aimed to attract high-risk traders who wanted to make leveraged bets on cryptocurrency. Soon enough, the exchange quickly piqued the interest of venture capitalist crypto investors. 6 months after its launch, Binance invested in the company. Following a $900 million funding round in July 2021, FTX was valued at $18 billion, catapulting the company to international prominence and generating additional investor interest. The exchange also secured Temasek and Tiger Global as backers in October 2021, raising the company's valuation to $25 billion. And in January 2022, just after the crypto boom peaked, FTX raised $400 million in Series C funding. These investments increased the company's valuation to $32 billion, propelling SBF to the top spot for richest crypto investor. And by the time the venture capitalists complete their final rounds of funding, FTX had grown to become the second largest cryptocurrency exchange by volume. In fact, FTX handled more trading volume in April alone than Coinbase's estimate volume for the first 3 months of 2021. Also, its leveraged derivative products were extremely popular with traders and had grown so popular that only Binance had higher volumes. FTX was also more valuable than Twitter, the Nasdaq Stock Exchange, and Germany's Deutsche Bank, which was not bad for a 3-year-old company. Before we proceed with the rest of the video, make sure to check out the rest of the videos on our channel, like and comment on this video, and subscribe to never miss a video. During FTX's meteoric rise, the company signed sponsorship deals with Mercedes Formula One team and secured naming rights to the Miami Heat basketball team's home court. Bankman-Fried also appeared on the cover of Fortune and Forbes, which touted his personal wealth at about $17 billion. Just 2 years after its inception, FTX's product portfolio included crypto derivatives, options, volatility products, tokenized stocks, prediction markets, leveraged tokens, OTC, and pre-IPO tokenized stocks that catered to a wide range of traders. No small feat for a team of about 100 people. In 2021, FTX received a lot of attention for its future contracts, such as the Trump 2020 and other President 2020 contracts, which allowed traders to bet on the outcome of the US election. The FTX platform had approximately 1 million registered users, which included institutional traders, family offices, and cryptocurrency investors. While primarily focused on professional traders, FTX also expanded its retail trading offerings. In 2021, FTX paid $150 million for Blockfolio, a portfolio tracker, giving the company access to global retail users' interest in investing in cryptocurrencies. FTX initially drew crypto investors of all skill levels, from beginners to seasoned professionals, or in crypto jargon, from newbies to whales, due to its diverse product offering and user-friendly desktop and mobile trading apps. The FTX platform supported a wide variety of other types, from simple market orders to more complex trailing stop orders. The exchange accepted 9 fiat currencies for deposits and withdrawals via wire transfer, and its key products included futures, leverage tokens, options, move, and spot markets. Even those who were unfamiliar with the technology were enticed to FTX by the promise of being able to park their money in accounts and earn much higher yields than a traditional bank. When the crypto market began to decline in late 2021, the major platforms began to close. FTX appeared to be immune, even buying up some of its struggling competitors such as Genesis Global Capital, Gemini Crypto Exchange, and a couple of others. The exchange appeared to be running smoothly until November 2022, when the balance sheet of Alameda Research, a crypto-focused digital media website owned by Bankman-Fried, was published by CoinDesk. If you're curious about what happened next and how this massive crypto exchange went downhill, watch the video we made about the fall of FTX. Thanks for watching. If you have any thoughts on this video, drop it in the comments section. And if you want to learn more about cryptocurrencies and stay up to date on the latest news in the crypto space, turn on the notifications button so you're notified whenever we upload new videos like this.